Welcome to the Fintech Times News and Views podcast. Established in 2016, the Fintech Times is a global multimedia news outlet centered around the world's first leading fintech newspaper. We report on the latest and brightest ideas from the fintech world. Follow the conversation using hashtag TFD News and Views and follow us at the Fintech Times. Hello, and welcome back to the Fintech Times News and Views podcast. I am here as ever with the lovely Francis and Tom. How are you guys doing today?
Not too bad. It's been. I think last week I remember saying like, I hope in February is going to be kicking up a notch. You know, we're going to start getting busier again. I feel like this week has been the week to get us back in the groove properly for this year, and we started getting the good announcements coming in once again. So I'm quite excited for that.
Yeah, absolutely. A lot's happening at the moment. Francis, how are you? You had a little bit of a jolly out, if I'm right, this week.
That is correct. That is, in fact, what I wanted to talk about today. But I had the pleasure of going to the Digital Insurance Summit Europe. So yeah, no, it was a nice change of pace from the desk and the usual day to day. But it was really enjoyable, and looking forward to the conversation.
Awesome. Look forward to hearing about that later. So you're going to be speaking about the things you saw at the conference. Tom, what are you going to be talking about today?
So I am going to be discussing the downturn in investment in the fintech industry in 2023, specifically in the UK, but also look at why the outlook might be a little bit more positive for the coming year.
Love that. And I'm going to be talking about buy now, pay later. We've had a few interesting pieces on that this week, so I thought that'd make a fun little topic. But Francis, I'm going to let you go first because I feel like I want to hear about what you learned at the conference you went to. So take it away.
So yeah, I mean, thank you very much. It was a nice trip to Fulham in a very nice venue called the Hurlingham Club. And as I said, it was the Digital Insurance Summit Europe. And it basically set out to sort of really analyze the insurance sector and how attitudes are changing to be more customer centric and really focus on the customer experience. Because a lot of the time, no matter how good the intentions might be for an organization, when sort of the topic of customer experience or cost efficiency, there's only so much funding and you can only pick one or the other. Unfortunately, the short term cost efficiency usually receives the funding. So it was really sort of diving deep into understanding how can those attitudes be changed and how can organizations really understand the impact that long term investment for customer with a customer first mindset can really impact. And a lot of it came down to culture, and there was a lot of really interesting discussions that were had, and I really have to say that it was one of the more interesting events that I've been to, in the sense that the amount of audience interaction was definitely the best that I've ever seen. The way that it was held and organized, everyone was constantly engaging with what the panelists were saying, be it through QR response codes or submitting their own answers on the board, or questions that were being asked. I mean, sometimes when you go to some events or some panels, unfortunately, some of the audience aren't always feeling very chatty, and the moderator will go, "Is there any questions?" And then sometimes we get that awkward silence, but that definitely wasn't the case here. But the main thing that I wanted to discuss with you both really today was one of the panels that I attended was called "How Can You Create and Launch New Products That Add Value for Your Customers and Capture More Market Share?" And it featured a variety of experts. It featured Richard Boyd, head of product and digital claims at Lloyd's, Christopher Moore, head of IBOT at Apollo, John Pyle, head of underwriting and product at Great Lake Assurance SE, and was moderated by David Clamp, founder and chair of the Camelot Network. And one of the biggest quotes that stood out to me from this event was one of Pyle's comments where he said, "I'm beginning to hate the word innovation." And when someone says that, your ears usually pick up a little bit or perk up a bit, because you just sort of think, huh? Since when is innovation a bad thing? But then he went on to explain, we've been saying that at conferences I've been at for the last 6 to 7 years, and what I want to see is evolved policies, not just a massive internal project. So what I really wanted to discuss with you guys today was this idea of evolution versus innovation. What should organizations be prioritizing? This big project that could completely revolutionize everything, which could massively accelerate everything really if it works and goes to plan. But of course, then you have to take into consideration the amount of resources that you have to put into developing it. Or alternatively, is it better to evolve the system that you have so that it's really working from a back end to the front rather than the front to the back, which can often be a little bit challenging in the insurance sector. So, Tom, I want to hear from you first. What do you think? Is it better to evolve or to innovate?
That's a loaded question. I feel like it's. I don't really want to commit to one side or the other because I feel like this is the perfect opportunity to say I'm just going to sit on the fence for this one. Because honestly, I completely understand the point of, innovation is the word at the tip of everyone's tongue at the moment, particularly since we've had this whole buzz about AI in the last year and a half, let's say. And everyone's excited about the new potential of, let's say, AI in changing the game dramatically in a number of ways. So everyone's talking about innovation and what's the next big thing, the next big technology to change the face of everyone's operations and customer facing services and things like that. But I get the point. You can't get too caught up in that, and you have to respect that you need to evolve your existing systems and policies as well to make sure that what you do have doesn't become outdated. And I mean, like I said, I think just a good mix between the two is something really important to consider. I think banks, when you look at like incumbent banks, we've often spoken about, they have now like outdated systems. The challenger banks are kind of capitalizing on that, and a lot of them probably need it again, a mix of innovation and evolution to get them to catch up to where the technology stands at this point. So yeah, I hate to be that guy, but I think split down the middle and say they're both just as important as one another if a company's going to succeed and stay up to date.
I mean, that's understandable, albeit incredibly boring that you've not picked a side, but whatever. But no, in jokes aside, I think that is a very valid point, and also I think that is what the panelists ended up saying as well. That, they did cite it. There was a debate between them, which is again why it was so interesting. Christopher Moore was saying he defended innovation following Pyle's comments, and he said although evolution is like there is a phase to it, he explained that innovation must be embedded into a company culture, and even the smallest tweaks can really result in massive growth, and that still does count as innovation. And then Boyd also added that if you get the infrastructure and the culture set up properly, then you can move to an evolution model that can really make change happen quickly. And then that is instead of having to do a massive innovation project. So there is definitely, I think truthfully, the right answer is you can't pick one side or the other because they are both very important. Saying all that, Polly, which side do you pick? Evolution or innovation?
So I found this question, this topic, really interesting, and I definitely think this is something that like you should do as like some wider content for the website or the paper or something like that, because I love this idea. And the idea of like, so I was trying to think about, right, okay, actually, what would I pick? Because I didn't want to fence sit like someone in the corner. And so I was like, right, okay, what is innovation and what is evolution? Like, what is the definition and what is the difference? And so I kind of did a little bit of research before we came on. And I tried to find like, and there's a few people online talking about it. There's a few like different articles of people, not necessarily in the fintech space, but like just talking about like innovation versus evolution or revolution or whatever you want to call it. And I think the main thing that I can find as the difference is innovation is like quick and evolution is slow. And obviously, like, there's a bit more nuance to that, but essentially, innovation is almost like a big, like, woomph, this is a brand new thing that we're doing. Wow, we've made some awesome stuff. Look at this. Whereas evolution tends to happen over time. And even though you could start with maybe one product and end up with an entirely different product, like maybe you've had an innovation, it just takes a little bit longer to get there and like smaller tweaks to get there. And even that I found really interesting because, to be honest, it kind of sounds like they're two very similar ideas. Like the idea of innovation and evolution, they're all resulting in like cool new ways of doing stuff, to be like super, you know what I mean, like to be colloquial, I suppose. And so I just find this idea really interesting, and I think it's hard to pick one, so I can understand why Tom sat on the fence. But at the end of the day, I don't know. I feel like, and this could be entirely wrong, but evolution feels like a good way to go rather than innovation. So as we all know, like, innovation is the cornerstone of a lot of things, and like the guy in your panel, we do hear the word innovation so much, and it has become like a buzzword, and everyone kind of throws it around, and you do wonder if people throwing it around and actually know what they mean when they say it. But actually sitting back and kind of looking at your product or whatever it is and like thinking, how can we make this better, still feels like innovation, but it feels like it in a more considered way. And there's nothing to say that that isn't innovation, but going, here we have this product, we want to improve it for our customers because our customers have said X, Y, and Z. We want to improve it for us because these are some pain points that we've realized in terms of the back end running, and this is what we want to do. And slowly over time, you make things better, you make little tweaks, you get feedback, you make more tweaks, you get more feedback, and go on and on and on and on. At the end of the day, in theory, you're going to have a product that is everything that you want it to be. It's everything your customers want it to be. It's everything you want it to be. Because, evolution happens for a reason. And obviously, if you think of it in like, the natural sense, it happens over like a million of years, and it all happens for a reason because, an animal wants to get the leaves off the tallest branches, or they want to swim better or something like that, like really lame. And I think you can apply that here because everything happens for a reason. And if your product or your service evolves in the way that it is, that to me seems a lot more useful than just going, bam, here's a new product. Like, here's a new thing. We've changed everything. We've revolutionized everything. This is groundbreaking, which, as we all know, we see in a lot of press releases that everything's always the next big thing. Everything's always groundbreaking. And it's like, is it really though? Is it? So I don't think the two are that different. I don't think evolution and innovation are that different. But when you boil down to it, I think actually not necessarily even like a slower approach, but just like a considered approach, and thinking about what you've got, thinking about what you could have, rather than throwing around buzzwords. I think that's where I sit on this argument.
See, now that is an answer that I like. Tom, take note.
Yeah, Tom.
Consider me off the fence. I'm evolution all the way now.
See, I'm the same. I think I do agree that evolution is the right way forward, and that you can't really have this complete change of. It can't happen overnight. A company culture can't just be uprooted and replaced with something completely different just like that. Saying all this, another panel, and I don't want to go on about it for too long because I am aware of the time and we do have other things to discuss, but I wanted just to add it before, is that one of the other panelists was in a different panel as well, sorry, I should say, was discussing how typical and incumbent insurance firms aren't taking risks, and because of that, they're remaining in this sort of limbo state where they're not innovating and they're not doing anything because they're all too scared to really take that leap. So while I do agree with you, and I think, and this isn't me playing the devil's advocate because I do agree, but I do also think that there needs to be an element of risk taking from the organizations, from the insurance sector and just fintech in general. There does need to be an element of, we do need to gamble here to see if this is going to pay off. And I think there is definitely a fine line to walk, and it is definitely room for a much larger conversation. But anyway, moving on to the next one. Polly, why don't we go to you next?
Yeah, sure, absolutely. What a way to kick off the podcast. I feel like my brain is all thinking now. But anyway, brain is all thinking now. That just immediately like disregards anything I've just said. Anyway, buy now, pay later. Let's talk about that again. Obviously, we all know it's a hot topic all the time, and we've talked about it loads. But being a Paytech month on the Fintech Times, it's kind of coming up again, obviously. And there was a lovely little article on our website all about how our buy now, pay later providers overcoming industry myths. And this caught my eye, and I like this idea of the myths around buy now, pay later. And I feel like, it's got a bad rep, and I think we all know that buy now, pay later has a bad rep. And I thought this piece was really interesting in terms of talking through like the bad rep and, explaining all the different ways that actually buy now pay laters aren't that bad. And one of the ones that really caught my eye in terms of a quote was from Tom Eyre, if that's how you say his name, co-CEO and co-founder of Lockbox, which is a credit broker. And I thought that was really interesting because he said there is no ethical or unethical lending products. There are simply lending products and how consumers use them. And I thought that was a really interesting quote because I think a lot of the time, as we've said, countless times, and other people have said as well, when it comes to financial products, it's not necessarily what the product is, it's how you use them. As he's saying in there, it's not necessarily inherently going to be a bad thing. It's all about having the education and the knowledge and sort of informed usage, I guess, of knowing how best to use a buy now pay later product or any other financial product. So obviously, if you use a buy now pay later product, if you make your payments on time, make sure your payments aren't late, make sure you have the money to pay for those things, then you're going to get a really great product and a really great service out of it, which a lot of people do find really useful, especially, around things like Christmas and things like that. It is a very useful thing to be able to spread those payments. But it's when you start using it wrong, that's when the issues lie. But then I thought that was really interesting, this idea of an unethical lending product, or the unethical versus unethical lending product. And that immediately made me jump to, this is probably like a bit of a reach here, but that immediately made me jump to like sort of like payday loans and things like that, which I think you can kind of argue is a more unethical lending product. And I know buy now pay later is often, compared to payday loans, and there's so many like different differences between them. But I know that's something that I think its critics often sort of compare it to. And then another piece that we had done, written by the wonderful Tom, was about how buy now pay later could leave many Brits in a hole they can't get out of, warns Fido.com, which I thought the contrast between these two pieces of buy now pay later is not that bad versus actually it could be a serious issue for a lot of people, because a lot of people are using these services without being regulated, and regulation still hasn't happened, even though there's a lot of pressure from all different places for that regulation to happen. Buy now pay later is still fairly unregulated, and at the same time people aren't necessarily using the services correctly, and they're not having necessarily the information they need to make decisions, and they find themselves in a tricky financial situation. So I wanted to throw that to you guys. Obviously I've just like talked a lot about buy now pay later, and I think, at the end of the day, it is a financial product and it is a financial service, and it's something that a lot of people find useful, and we're finding a lot of really cool new ways to use it for and use it with. And, as we talk about innovation, I think that the industry is breaking a lot of different innovative barriers in terms of its use of buy now pay later for a lot of different people. But I think I'd really love to get your guys' opinions, especially in light of sort of these two pieces that are on the site. And are we ever going to get to a point where buy now, pay later loses its bad rap and just becomes, like everything? Because I mean, if you think of the credit card, yes, a credit card has a lot of risks associated, and a lot of people are sort of warned against using credit cards. A credit card doesn't have anywhere near the same bad reputation, in my opinion, as buy now, pay later products, even though they are very similar things. So I'd love to know what you guys think. Tom, I'm going to go to you first.
Yeah, when we published these two articles so close in time together on the site, obviously the first thing that came to mind was how different the kind of the messages between what finder.com says and what a lot of the experts were saying from the space. And it's interesting that there is this contrast, and I think that's a really interesting point you make actually about credit cards and kind of the similarities in sort of the way they operate, and yet the perceptions of them are so completely different. And I think that's an interesting point to make. But obviously what finder.com was saying in their article was they believe that legislation should be passed that gives like the FCA more powers to regulate on these BNPL firms, and they don't currently have these powers to ensure that consumers are getting the same amount of protections that maybe they do when they use credit cards. And I think that might be some of the reason why the perception more with credit cards is, well, if you've got into debt with a credit card, that's your own problem. It's your own unorganization or your own kind of problem that you've caused yourself. It's not the fault of the credit card. You knew exactly what you were getting into when you got one. And obviously a lot of talk is about sort of hidden fees, or they're not being completely upfront with how much you'll have to pay back if you have a late repayment, for example. And one of the main points in the article where we had a lot of experts contribute was that most BNPL companies now don't have any hidden fees. It's very upfront, it's very transparent, but obviously some bad firms do exist still. And I think that just shows the importance of, especially in the UK, getting this regulation in and passing some sort of legislation that ensures that, you know, the very sneaky few that exist can't quite operate in that way, and they do have to be more transparent, and there is some sort of regulatory body that can back that up and ensure that those rules are upheld. So yeah, I think regulation probably is one of the main areas that needs to happen in order for that final sort of bad rep for BNPL to be sort of cast away, and for it to be seen in the same kind of light as other lending products that have existed for however many years now. And I think it's just yeah, it's obviously still in the grand scheme of things a fairly new concept, and some people are still getting used to it, still understanding actually what the consequences are if you use it incorrectly. And hopefully, as time passes, we do get to see maximum consumer protections as we do with other lending products, and also see this kind of bad rep be reduced as that happens.
Yeah, I completely agree with you, and I definitely think regulation would go a long way. And even just the ability to sort of complain to a financial ombudsman if things go wrong. I think having that protection there would be useful, because you can't really do that at the moment. And I guess it's sometimes I do feel like the negative attention that buy now pay later gets is unfair in a lot of ways, because it's a lot of criticism, and there's a lot of different ways that, yes, things can go wrong, but at the end of the day, like we say, it is just a financial product that you have to use, and actually it can be really helpful, and especially the people that use it and use it correctly, it can be a bit of a lifeline when you've got like a big purchase to make, that especially for like an unexpected one. But Francis, what do you think about this? Where do your thoughts lie on buy now pay later?
Well, what initially sort of, when you were talking before, Polly, what really stood out to me is that I don't think there is ever going to be a time where buy now pay later hasn't got some sort of bad rap, doesn't have some sort of bad reputation associated with it. I do think that it's kind of like Tom was saying, a lot of it comes down to the users really, and the users not. It's almost like they think that BNPL is different to credit, in the sense that you almost don't need to pay it back. It's almost like you're getting something for a discounted price. I think that might be a bit of a stretch, but the way that some people treat it, and they suddenly act surprised when they have to pay back the money, and I think that's a little bit. I think that's more on the consumer than it is on the merchant. What I did find really interesting in the article was what Serena Smith said, the chief client officer at I2C, and she was saying that improved communication and responsible lending practices are what is really helping BNPL move away from this bad rep. And I really think that communication is key. It's sort of like, as Tom was saying, transparency is a massive thing now. And I think that is really a key thing that needs to remain in order to see BNPL continue to do well. And I think there's always going to be some bad eggs or bad apples, whatever you want to call them, in the mix. But I mean, that's the case in every aspect of the financial world, and just in the world in general. So I think just because of its history, it gets treated quite harshly, BNPL.
Yeah, I absolutely agree, and not to harp on this topic at all, but I think just to sort of finish off this segment of the podcast, I think another quote that I really like from the piece was from Sergi Fitzak from Softjourn. I've butchered that, I know, but he said that buy now pay later providers have actively addressed concerns about the debt trap, and then it goes on to another quote from Sean Carpenter, who said all those about this scary story, saying buy now pay later is a debt monster in disguise. The past year has busted those myths. With a bit of know-how and responsible spending, buy now pay later isn't the big bad wolf some thought it was. And I think that's quite a nice place to end it, because I do think, as we've said, there is a bad rap there, but a lot has been done to change that. And I think once a little bit of regulation comes in and things are starting to sort of be serious on that side of things, I do think we can see things changing in terms of perception on buy now pay later. So that'll be really interesting to see. But anyway, moving on very finally then, Tom, why don't we go to you and you can take it away with your piece?
Absolutely. So, yeah, the last piece is based on a recently released report from KPMG called the Pulse of Fintech Investment Report. And this basically revealed that UK fintech investment dropped to $12.3 billion in 2023. And while this sounded like a lot to me upon initially finding out about this, this is actually significantly down by 34% compared to the $18.7 billion that was invested into UK fintech in 2022. And I thought this research really just highlights just how much the geopolitical and macroeconomic uncertainty has impacted the space in the last year. So, obviously, we've had some of the biggest events and conditions, including the conflicts in Ukraine and the Middle East. We've had a high interest rate environment, and tight liquidity has been seen across all different regions across the globe. And that's basically seen fintech investors, deciding to hold on to their cash rather than invest in it in 2023. But overall, UK fintech investment last year was the lowest seen since 2020 and the COVID-19 pandemic, in which only $6.5 billion was invested. And that in itself was a serious outlier. So if you disregard that year, it means that UK fintech investment in 2023 hit its lowest level since 2017. And despite all this, KPMG were quick to point out that it isn't all doom and gloom for the UK fintech industry, as it revealed that British fintechs are still much more attractive for people looking for it to invest in compared to those in France, Germany, China, India, Brazil, and Canada combined. So obviously, compared to a lot of serious regions in there in fintech as well, and British fintechs have still attracted far more funding than all of those combined, which is obviously a good symbol in the global context of things. But a quote that I found quite interesting was from Kareem Haji. Hopefully, I haven't butchered his name. He's the global and UK head of financial services at KPMG, and he explained that he believes that we're entering what he calls the next wave of fintech, and that the pace of innovation and development in the likes of generative AI could mean that there's a significant uptake for the space in the coming year. And certainly in the second half of the year, we could see a big uptake in investment for the space. So, with all this in mind, I just wanted to get your guys' take on this in any aspect, really. Whether it's that you agree that innovation could influence greater investment in the space, despite these global conditions continuing, or how you've seen reduced investment impact the space, and maybe any areas of innovation that are particularly exciting you currently regarding UK fintech. But Francis, I'll come to you first.
Yeah, cheers. I think it was 2 or 3 weeks ago. No, I can't actually remember when it was. It was towards the end of January. I went to another event where they were sort of talking about the outlook of especially in the UK, fintech investment in 2023 and in 2024. And I thought what was really interesting is that there was what was made very clear is that since the pandemic and since sort of COVID and the digital drive that really took place, fintech investment has been on sort of a steady downward trend. But I think this is the what the experts were saying, at least, was that this is sort of expected to sort of slow down now, even to the point that, kind of like as you sort of just alluded to there at the end, there are a lot of new technologies that have emerged onto the scene, like generative AI, like other forms of artificial intelligence and other things completely as well, that have all impacted the way that fintechs work and how they're able to partner and work with each other. And I think when you look at all that and what potential collaborations can mean on this, like the grander sector, I think then that is when you can really sort of say that 2024 could be, in fact, a very good year for fintech coming back again. And there are, like the article shows, is that there are still some subsectors that are doing very well, and they're not only just doing marginally well, they've grown by a lot. So, for example, the two that were named were prop tech and insurtech, with with prop tech almost, well, yeah, almost or over tripling, I should say, its value, and insurtech growing by almost 3 billion, or almost 3 billion itself. And I think when you look at that, I think there is definitely some optimism to be had. And I think when you put it in the grander scheme of things, looking back at the previous years, it's not a thing of fintech has necessarily lost popularity. It's just that initial hype that was driven by the need for digital. I think that's really starting to wear down. So now fintech can sort of succeed because of what it is, really.
Yeah, definitely. I think the whole space is kind of been gearing up. Even the second half of 2023, a lot of experts saying we're kind of coming towards the end of this sort of downward trend in terms of the massive impacts that the industry is felt. Obviously the COVID-19 pandemic hit basically every industry across the globe, and this seems like a lesser impact, but over a longer period of time. So many different things, especially in the UK, for example. We've seen higher interest rates. They've stayed high for a while now. That's impacted a lot of the industry in terms of being able to lend money, and it just means that with reduced lending and investment, it's been harder for the space to grow, and certainly for different fintech firms to ensure that they can continue growing and even continue to survive. In many cases, we've seen quite a lot of fintechs recently close their doors, and I think it's an interesting time. But it certainly looks like there's light at the end of the tunnel. Like as you said, the kind of explosion of AI that we keep talking about, but there's a reason for that, and it's because that is going to attract a lot of investment in certain sectors. And I think really, as these kind of geopolitical situations calm down, they have lesser impact on different economies worldwide. We might see investors finally, taking some of this spare change that they maybe didn't spend last year and invest in it towards the end of this year, maybe. So I think it could be an interesting year to see how much investment does change compared to 2023, whether we will see an uptake or whether like you said, we're just going to see slightly more downturn in investment. It'll be interesting to see where that trend takes us. But yeah, it's definitely a time of uncertainty, but hopefully one of the time to be optimistic as well. But Polly, what do you think about all this?
It's a really interesting sort of topic, and I guess the kind of what if you look at things, 2021. So obviously, we said as 2020 was like an outlier year, but also like a particularly difficult year for investment, which makes sense. But 2021 was a really great year for fintech because obviously, like Francis said, everything was really pushing to digital. Everyone wanted like contactless card payments or like digital finance, and it was all wonderful and prosperous, and everything went really, really well. And I guess I wouldn't necessarily, obviously, it's like a decline in funding and it's like a steady downward trend. But at the same time, I feel like, did we just peak really high in 2021 to the point where now it feels like a disappointment that we're not having these like major deals as we were seeing before? I mean, even I think 2018, that was a particularly good year for fintech as well, that saw a record of breaking investment from Silicon Valley Bank State of Fintech report. They found that 2018 was a huge year for fintech investment. So obviously, being like the worst year since was it 2017? You said, yeah, since 2017. So that kind of tracks after having these like two great years of investment. So obviously, it's a bit disappointing, and obviously, I'm sure it's got people maybe slightly worried, and especially when you think about lots of like the startups and other places that are trying to get off the ground with all the innovation we were talking about at the beginning. I think it's something that just not necessarily to be overly worried about. And I'm saying that obviously with no idea about investing and the economy, blah, 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 blah. I'm just me. But at the same time, it just feels like, as with the rest of the economy, obviously it's been a really difficult time for everyone in terms of, especially in the UK, in terms of, the cost of living crisis and high interest rates. And that all trickles down or in some cases, I guess, trickles up in the fact of people are going to be wanting to hang on to their money. Even if you've got enough money to invest in a fintech company, you might want to think about hanging on to it a little bit rather than investing it just in case something goes wrong. And I think this drop in investment obviously is seen everywhere. But in the same time, I think as interest rates are starting to sort of go down and kind of we're starting to see the light at the end of the tunnel in terms of kind of the economy and, at a consumer level, I guess, is for want of a better phrase, I think that's when we're going to start to see an upturn again. And certainly it seems very optimistic that we're going to start seeing the trend going up. But I mean, at the end of the day, you've got to remember $12.3 billion is still a lot of money. Like you said at the beginning, Tom, like that's still a lot of money. And yes, okay, it was $6 billion less than last year, but that's still $12 billion. That's a lot. So I think obviously it's something to be aware of and it's something to think about. And I'm sure it's got a lot of fintechs, especially like the smaller ones, maybe feeling a little bit worried. But I think funding has always been an issue that fintechs have had to face. And that's something that we've seen time and time again, the funding gap in a lot of different ways, especially as depending on like your location, your gender, as well as we've seen before, like, women often find it more difficult to find funding if it's a female founded company. So I think it's just something that you kind of have to take in your stride and hope for the best. But I think things are going to be changing pretty soon. But anyway, that brings us to the end of our discussion. I feel like we've had a really good discussion. So I'm really proud of us today. We've all said some really good things. So well done us. But anyway, if you want to hear anything that we've talked about today, head on over to fintechtimes.com, where we've got plenty more news and insights over there. And we will do what I learned this week. So each week we learn something new all the time, being on the Fintech Times editorial team, that we thought it'd be fun to share that with our listeners. So Francis, what have you learned this week?
This week, I learned that nearly half of all cross-border payments will be instant by 2028, according to Juniper Research.
That's a very good thing to learn. Tom, what have you learned this week?
Well, continuing the theme of talking about the UK and AI, this week I learned that the UK government has set aside over £100 million for researching and developing AI and to support regulation in the space.
Love that. And I learned that over 9 in 10 UK firms have paid ransoms to I'll do that again. And I've learned this week that over 9 in 10 UK firms have paid ransoms despite alleged no-pay stances. So there you go. But thank you guys so much for joining me this week. As always, as I said, a really good one this week. I've really enjoyed our conversations. So I will catch you on the next one.
See you guys next week.
See you guys then.
Thanks for listening to the Fintech Times News and Views podcast. Don't miss next week's episode and continue the conversation using hashtag TFT News and Views and follow us at the Fintech Times.